Hello and welcome. You're watching Markets Today. I am Sakshi Batra, and this is where we discuss all about the stock market opening action. What is really going to be the trend for today? Where are the gains and losses being seen? The sectors in focus, the stocks that are moving the most, all of that coming up right up next for you over the next 3 to 4 minutes. So stay tuned. Let's start off with the opening action. We've opened lower yet again, and this is after the weak global cues that we've been seeing overnight for the US markets or early trades in the Asian markets as well. SGX Nifty did indicate a negative start, and we have seen the Sensex slipping 300 points right at the opening levels as well. Now, if you talk about the levels, Sensex slipped 337 points or 0.5% lower in trade to open at 59,273. The Nifty also moved 82 points lower or 0.5% down to trade at 17,726. However, mid and the small cap shares were still trading on the positive note, whereas the mid cap index moved up almost 0.25% higher, and the small cap index moved up 0.5%, in the early trading action as well. Now, 8 out of the 15 sectoral gauges on the National Stock Exchange did open in the red, with financial services and IT underperforming the benchmark indices in the early trading action by slipping almost 0.7-0.8% in trade, respectively. On the stock specific front, you again have the HDFC twins that are the top losers. Remember, after that massive move that we saw on the day HDFC and HDFC Bank announced their merger, almost 15% intraday jump for both these stocks, something that has never been seen on a single day basis. And after that, it has only been a string of profit booking right from last 2 days as well. So that's exactly what we are witnessing today. The stocks cracked up almost 2% and 1.5% respectively on HDFC and HDFC Bank. UPL, Wipro, Titan were also among the laggards as well. Titan has in fact reported some updates about its business operations in the last quarter. It has indicated some of the jewelry demand has actually slipped in the December quarter as well, or the March quarter as well. So keep that in mind too. HDFC Twins had surged 10 to 15% on Monday when they had announced this merger, and right after that till today it has only been a downward direction for both these stocks as well. So what does it really mean? Is it time for all the investors who've been looking to tap on this opportunity, since the merger will take a long time, almost a year or so, and you can actually look to actually lap up onto these opportunities on the dips on these stocks to actually get into those portfolio stocks as well? Or should you just wait for some more correction? Those are going to be the focus points of our entire shows today, and we will get you some expert voices on HDFC and the market direction overall too. The overall market breadth definitely looked strong, as 1900 shares were seen advancing in the early trading action and 767 shares decline. And on the other hand, you do have a whole lot of stocks that are in the focus today, of course, on the back of news flows, especially Z Entertainment is in focus, with the Invesco talking about deciding to sell 7.8% of the firm through a block deal today. And after the sale, Invesco will be left with about 11% stake of Z. Remember, Invesco will sell 74 million shares worth 2,200 crore rupees via this block deal in the range of 270 to 290 rupees per share. There could be some pressure on the stock. Keep an eye out on this stock as well. Kotak Mahindra Capital will manage the stake sale. Titan, like I said, is in focus. The company's jewelry revenue has slipped 4% on a year-on-year basis in the March quarter, but watches and wearables have actually seen a 12% growth on the revenue front. The eye care revenue was also up by 5%, and this is the kind of update for Q4 that Titan has been displaying. Maruti Suzuki has announced to voluntarily recall 19,731 units of its Eco model. The recall is being undertaken to inspect and rectify incorrect marking of wheel rim size, if any, on the wheel in some of the vehicles as well. This issue has no implication on the performance, safety, or environment, as per the company's note. HDFC Bank again is in focus today. The lender proposes to raise funds by issuing perpetual debt instruments, tier 2 capital bonds, and long-term bonds as well. So the company will be in focus. Bandhan Bank again will be in focus, as a consortium of banks parent Bandhan Financial Holdings, private equity firm Chris Capital, and Singapore sovereign fund GIC will acquire IDFC Asset Management Company for 4,500 crore rupees in the biggest buyout yet in India's 38 trillion asset management industry as well. So the mergers and acquisitions and some more consolidation continues right after that big bang HDFC merger too. So Godrej Consumer Products, another stock that will be in focus. The company expects to deliver close to double-digit sales growth in Q4. In Godrej Africa, US and Middle East, it continues the growth momentum across most of the key countries of operations and expects to deliver a constant currency sale growth close to mid-teens. Now, Union Bank of India is another stock that you should keep an eye out on. The public sector lender will invest 1,000 crore rupees in upgrading its IT platforms. DCB, another stock that you can keep in your mind. The private lender on Wednesday said the RBI has approved its reappointment of the MD and CEO. So some management rejigs not coming in over there. So definitely keep an eye out on that. But overall speaking, the market breadth still quite on a volatile note, especially on the back of the kind of comments that we've seen from FOMC, which the minutes of the meeting has said that the Fed will be more aggressive towards interest rate hikes and will also be aggressive in removing the liquidity support that it had extended during the pandemic times as well. That's causing a stir in the global markets, and the domestic markets are taking those sensors and also reacting onto those too. Especially tomorrow will be an important day for the domestic Indian market cues, and that will be coming from the RBI's Monetary Policy Review Committee, which is already underway. The policy review will be actually important because it is going to be the first policy review meeting in this financial year. And of course, there are some anticipations that right after March 2020, when the RBI had maintained a status quo on interest rates and a more easy monetary policy or loose monetary policy, some kind of reversals on that, be it on the stance, be it on the commentaries front, there could be something for the markets to definitely look at how the policies will be supporting the markets going forward from here, or will there be some kind of jitteriness. So all that will be important to track, and which is why most of the experts believe that till the RBI's Monetary Policy Committee review meeting and the outcome of that comes true, there could be some continued volatile move on the markets. They have definitely advised cautious moves by all the traders in the current markets too. We'll keep you posted with everything that's passing on these streets, so definitely stay tuned. On to with us on Business Today.